On this week's show, with the UK currently in recession, what is going to happen to the property market?
And we're going to be answering all of your questions in today's question and answer session.
Welcome to the Property Investors Podcast. Thanks so much for tuning in. Make sure you subscribe so you never miss an upload. You can catch us on Apple Podcasts, Spotify, and YouTube. Enjoy this week's show and don't forget to share it with all your friends.
Hi, I'm Russell Leeds.
Hey, I'm Alistair Cunningham.
And I'm with the ever optimistic sounding Alistair Cunningham. Literally, you couldn't have made that sound any more boring if you'd tried. It was like, and we're going to be answering some of your questions, I suppose, if you say in this way. How are you doing anyway, Mr. Optimistic?
I'm good. No, I'm really, really good.
You found it.
Yeah, very good. So I am actually today, I'm driving up to Scotland pretty much. Not quite. It's actually North Cumbria, but it's might as well be Scotland. So it will probably be raining. It will probably be cold. No doubt there'll probably be some snow at some point. So we'll just have to wait and see what happens. But I'm off up there for round two of the British.
If I told you I was going to Scotland and you said whereabouts and I said Cumbria, you would just rip me to shreds. He would have ripped me to shreds. He's been telling me all morning, I'm going to Scotland today, I'm going to Scotland today. I didn't realise you were actually going just to further north in England.
Yeah, I'm just going to, it's basically Scotland. It's like, it's not quite, but it's basically like, it's, yeah.
Is it England?
It's up north. It's still in England, yeah, but it's up towards Scotland.
You're in the wrong country, mate.
Yeah, I agree with that.
You're going racing, aren't you?
Yeah, I'm going to, I do kart racing, so I'm going to the round two of the British Championships. So.
And did you know that Alistair is actually a better kart racer than Lewis Hamilton, he was telling me?
Shut up.
I'm pretty sure that's what you said. When you were kids, you were the better one, weren't you?
I really didn't. No, I really didn't. I don't remember that conversation. It's just you just trying to wind up.
You're not saying you used to race with Lewis Hamilton?
Not race with him. I used to watch him race at Rye House.
Well, hold on a second. I used to watch him race. That's the same as everyone in the country, isn't it? We've all watched him race. That's not impressive.
When he was like 10 years old, I used to be in the same race meetings and things like that as him, but we were different classes.
So what happened in the race meeting? You were in the race meeting with him. What was a race meeting?
You don't get it. They have lots of different races in one race meeting. So you different classes. Like, do you know, like, you play that game, don't you? Or you play that game, where you kick a bag of air around. You play that game, don't you? Football, they call it. And you know how you have different leagues and you have different categories.
You don't take it seriously because of how bad Scotland are at it.
That's kind of true. That is kind of true, actually. So, like, when you go to a kart race, there'll generally be lots of different classes. You'll have juniors, you'll have seniors, you'll have the class with this size engine, the class with this size engine. So Lewis Hamilton, when he was young, he raced cadet, and then he raced Yamaha, and then he moved into a different. And I didn't race in classes. So I would be at like Buckmore Park or Rye House where he used to race. He'd be in one race and I'd be in a different race. I never raced with him. I didn't know him.
What was the difference between the races that you were in? Was his like good quality standard? Was he like top of the class?
He was always. It's like comparing the German Bundesliga to the FA Premiership. They're just different levels. They're just different people, different category, different rules, different. So there's no real comparison. So
who was better?
But like Lewis
who was better? Like,
people don't realize it, but Lewis Hamilton raced like in Hertfordshire. He raced in Kent. He raced all the kart circuits mainly around the UK before.
Who was better? A final answer: you or Lewis Hamilton? Age for age, when you were kids, who was the better racer?
Oh, I don't know. Him probably, because he's obviously been a lot more successful. And I'm not. But like whatever. I've done very well, but nowhere near like him, obviously, because he's British world champion. Very arrogant.
I love how you said. I love how you thought about it and went, him probably.
Of course he's better. It's Lewis Hamilton, isn't it?
So other than kart racing, you've been up to anything interesting this week?
I have been at the gym. I joined David Lloyd's. Say again?
You've been going every day, I hear.
Every day. I've been going every single day. I've been going to the gym every single day for at least an hour and a half. the last 2 weeks, pretty much.
How is
and
it?
you know what I find really, really, really good with going to the gym? Or I've never been into the gym. Like I'd join a gym, go for a week, or go for 3 days, and then that's it. Screw this, okay?
Whereas this time you've been for a week, haven't you, so far?
No. I've done it, but I've done it. My point being is, I've done it every single day for 2 weeks, every morning, and there's nothing. I actually look forward to going, which I never thought I would ever do. I never thought I'd enjoy this. But one of the key things to it, I think, it's like in business, having an accountability partner, having somebody that can go with you, because then you've got somebody to help you and support you. And that's like business, you know. You go further if you're with somebody as opposed to on your own, I think. And it's case in point with the gym, because I'm going with Ricky Mandel, because we live 20 minutes from each other. And it's just good having somebody that you sort of have that competition, like who's lost more weight, who's whatever, who can lift more weight, or I don't know, whatever. And that's what we're doing. So yeah, it's good.
And who has lost more weight?
Me. But Ricky's done really well. He's done really well. Say again?
Who can lift more weight?
Me. But again, it's just because I'm bigger.
You've lost more, you lift more. I'm going to tell him, I'm going to say, Alistair likes going with you because he just kicks your ass.
No, it's because he's. I've got bigger. I've got bigger hands. I'm bigger. I'm just bigger. I've got bigger structure than he has. So yeah, I can lift a little bit more. But like that, he's lost. Like he's lost a lot of shape. He's lost weight, and it's good. And we even played tennis the other day, and that was really good. We were like the complete newbies. Like we joined the gym, then we went to the sports shop and just bought loads of sports gear. Like new tennis racket, everything. Who won it? We've played 3 times now, and I've won 1, he's won 1, and then the other one we just had a little. We played at 6 o'clock in the morning, and we just decided this is far too early to play tennis, so we just ended up having a rally for like an hour, and then just practice serving, and then we didn't actually play. So we're drawing at the minute.
Nice.
So cool. I'm gonna next time I'm in your neck of the woods, we'll go and play tennis, or we'll go and play gym, whatever.
Because I've obviously moved house since our last show, and I've got a tennis court.
In the garden?
Not in the garden, no, but it's literally right at the bottom of the road, a couple of minutes away. So next time you come, bring your thing. I haven't played tennis for ages. I don't know how I'd get on with my elbow, actually, because obviously I broke my elbow.
Yes, good point. How's the elbow?
It's not. For normal use, it's fine. For weight, I can't do weights training yet, so I'm doing very, very lightweight practicing motions like this.
Do you like repetitive sort of like moving back and forward, repetitive muscle like strength training? Yeah.
Well, they said they were amazed actually at how good my action was. They were like, where have you been training? But so I don't know. But yeah, I'm a natural. I don't know where my natural. I don't know where it's come from, but yeah. So let's get on with the show. So what we're talking about? Yeah, recession. So probably countries going into recession.
I've just dropped my iPad. There we are. Sorry.
I am stunned that the country is going into recession, personally.
But obviously it's kind of expected, because you know how they calculate recession. It's done over the previous 3 months, GDP.
I would have thought everyone was spending loads these last few months. The fact we've gone into recession is absolutely slap in the face shot. I mean, I'm obviously being sarcastic. Yeah. Who didn't see it coming?
Of course.
But considering that we're all locked in, not able to spend.
Yeah.
Go on. What was your definition of recession again?
Well, it's not my definition. It's how they calculate. Let me just spin these blinds around because I've got a bit of light on mine. It's how they calculate it's where they calculate the GDP versus in 3-month periods. If it's down more than for, I think it's 2 or 3 months. 2 or 3 blocks of 3-month periods where it's naturally progressing downwards.
It's 2 successive quarters of spending being down, basically.
Yeah.
And it's like, well, is anyone surprised? We've all been locked in, not able to spend. Of course it was going to drop. So
the Telegraph come out with this article, right? and I saw this a couple of days ago. It says, we're in recession, so why are home buyers so optimistic and why are house prices rising? Because house prices are rising. Like anyone that doesn't know this, like, where have you been? Like, house prices, the markets are absolutely booming and they're just going crazy at the minute. So basically, the Telegraph said, we're in recession, so why are home buyers so optimistic and house prices rising? The middle of a major economic crisis should be the worst time to buy property, yet demand is absolutely through the roof. Now, there's been a massive surprise frenzy taking over parts of the property market. Demand is super, super high, but supply is very low. And sellers, for the first time in a long time, are actually in control. One estate agent reported that a buyer so frantic to beat the competition put in an offer of 10% over the asking price on a country house after just one viewing, while standing in the property on its front lawn, and put the offer in there and then 10% higher than the actual market value to secure it. Now, Hamptons International have found that 30% of properties sold within the past month were subject to a bidding war, and three or more buyers from a bidding war from three or more buyers, and they were up 5% from the prices last year. Like, it's just crazy. Seriously, the hunger, here's another interesting line. The hunger in the market is underlined by the fact that properties are selling for 98.6% of the asking price, which is a record high. Yeah. But combine that with 750,000 job losses in the first 4 months of the crisis, the furlough scheme's coming to an end. Is it going to continue? Who knows?
Well, Zoopla have put out an article very recently. Let me punch this up. They were talking about what their predictions are for the rest of the year. So basically, they've said the demand. Obviously, everyone knows the demand for houses have rocketed since the end of lockdown. I mean, I think there's a few reasons for that. I'd say, first of all, the fact that we couldn't buy, the fact that there was a point where everyone was just locked in their homes and we couldn't buy. Suddenly, you're allowed to. It's like, oh, you go crazy. It's a bit like the football transfer market. You're not allowed to buy. Yeah. When they open it, everyone's like, oh, we're buying like crazy. So, I mean, there's a part of that, but also, people have been trapped in houses and going, this house is crap. It's or they're trapped in people. I think 500,000 people nearly have moved out of London.
Yeah, well, I have.
Massive.
Yeah. But also, that's not just for sales. Lettings are really busy as well.
Dude, lettings. I mean, we both moved during this time. How crazy have lettings been? I mean, the ones I've talked about this before on the show, but when I was sort of looking, you'd go on you'd click the already let button or whatever, let agreed button on Rightmove, and there was more let agreed than there were for sale by far. Yeah. It's been crazy. We talked about this before, where we book viewings for a day, and before you even go on the viewings, houses are being sold, have multiple offers on. My PT wanted to move to Buckinghamshire. Because he lives an hour away, and he's coming here to see me and Sammy every day. He's like, I might as well move over. And he was looking to buy a house. He's got family here as well. He found his perfect house. He booked a viewing on it, and before he went on his viewing, it was in a couple of days' time, they'd had 20 offers.
Wow!
On the house, and it sold way above the asking price.
You know what I'm seeing as well, speaking to agents, they're getting a lot of offers put in on the back of just virtual viewings, not even a live viewing. There's a lot of offers going in on virtual viewings, and it's interesting. But it's funny because all the sort of big banks and that, they're all predicting house prices are forecast to fall later this year, 2021.
So Zoopla said, demand for houses have rocketed since the end of lockdown. According to a report from property website Zoopla, properties are selling far faster than before the pandemic hit, with the average selling time of a home decreasing to 27 days. That's the average selling time, 27 days. That's fast, isn't it?
Yeah. Well, I'm assuming that's having an offer accepted. That won't be complete.
Yeah. But it was 39 days at the same time last year. Zoopla said 4 and 5 bedroom houses selling quickly as buyers prioritise more space because of and migrate away from the more expensive cities. But the firm also believes prices will rise 2 to 3% this year. So they expect it to continue going up because, like you say, there's a lot of people who are saying it's going to go down. So what are your thoughts on what the market? I mean, to be fair, we have talked about this before.
Yes, we have. Yeah.
We talked about it a few months ago.
But it's interesting, right? Because although demand has gone super, super high, lending has become stricter. Okay, now forget bounce back loans, forget C-bills, forget all of that sort of stuff. Actual going to a bank and trying to get a buy-to-let or a residential mortgage has become stricter, because what's happening is the banks are putting they're putting the mortgage applications through a lot more tests, like more stringent stress testing on the applicants, and they're very hesitant to lend to first-time buyers with very little deposits. Whereas 2 or 3 years ago, or even last year, you could get you could go into like a help to buy scheme or any of these schemes and you put low deposit entry. You can't do that as much now. So the pool of lenders that do that have reduced drastically. And what's happening is they're just they're making it harder to get a mortgage, which is.
Don't you think they are relaxing it a little bit now though? I was speaking to a mortgage broker a couple of days ago, and he was saying that they are slow. It's they've only you couldn't get 25% buy-to-lets really, could you? Not long ago, but he said that they've brought that back and they are relaxing it up a little.
Yeah, I mean, it will. Like I said, they did get really strict a lot, but it will over time get easier and easier and easier as things go back to normal. But I've spoken to a couple of mortgage brokers, and they're still whereas before you could get let's talk about development here. So before you could get really high LTV rates on bridging. You can't do that anymore. You can't, depending on it's all very subjective to the property, but on a conventional, for instance, the house I bought in Bedford, literally mid-coronavirus, when I was buying it, I lost, I can't remember, I think it was 5 or 10% overnight on the LTV. Now that's come back up to back to its original rate and full development funding. But yeah, so it's just a case of ringing around, speaking to mortgage brokers, finding out which ones are relaxed a little bit or relaxing, and giving them your situation and just taking their advice. But also, I think the reason, we've spoken about this before, but the reason for the boom, I think a lot, is down to the amount of money the government's been thrown into the economy and into the people, basically, bounce back, C-bills. I guarantee you bounce back loans are behind a lot of these property purchases. I guarantee it. There'll be so many people that could never have afforded it, suddenly got a 50 grand or 100 grand bounce back loan through a couple of companies, and now they're buying properties in that company. So, and I guarantee people will be doing it. Whether people agree with that or not, whether it's a right use of the money is a different story. But it will be happening. Yeah. I personally know people that are using bounce back loans to buy property.
Yeah. Which I don't think you're supposed to do that. I don't think you are supposed to.
It's very difficult it's not a straightforward answer, unfortunately, because a bounce back loan was brought back to help you prevent losses and help you basically help your business recover. So it depends what sector your business in. If you run a lifestyle leisure business or hotel, a lifestyle leisure or gym business or whatever, and then you use a bounce back loan to buy a house, how's that helping your business? But if you own a property development company and you've had your loan to value rate struck down, so you have to then put more money into it, that is helping your business. So technically, you're not breaking the law. You're not breaking the rules of lending. But I know initially, when all the bounce back loans come out, a lot of lenders in the terms and conditions suddenly added the use of a bounce back loan for deposits would not be acceptable. Use of bounce back loans would not be acceptable. And now a lot of them are they've taken it out of T's and C's. And I spoke to a mortgage broker the other day, and he said it's not as big an issue as everyone thinks, as long as it's been used correctly. So
makes sense.
So we are in recession, but we ain't going to be in here for long, I don't think. But do you know what? There's a lot now that we're coming out of furlough. The furlough scheme's sort of slowly starting to come to an end, starting to reduce. There's going to be people getting obviously laid off and people losing jobs. I mean, according to the Telegraph, there's been nearly 750,000 jobs lost in the first 4 months. So hopefully that's kept to a minimum. But yeah, we just have to play it by ear.
So, I mean, we've always sort of said in the past that we think that the market won't change massively either way. Yeah, so we sort of thought by January, it might move around a bit, but by January, it's going to be reasonably steady with what it was before. Would you still?
I kind of agree. I kind of agree with that. But I think I think you will get some local hotspots and you'll get some local bad areas. I think some parts of the country will be hit a lot worse and they might take a lot longer to recover. But as an average throughout the whole country, I think generally, I think it's going to go up, which it's doing. We're seeing it's going up. And then maybe towards the end of the year when everyone's bounce back loans run out and when things start to settle down, maybe it's going to dip a little bit. But I do think ultimately we'll come back stronger. Maybe it might take a year, might take 18 months, might take 2 years. But I do think ultimately we will come back stronger.
Yeah.
And all I'd say now, if you're looking to buy now, only buy the best deals. Don't be buying anything that's mediocre or anything that's borderline. Like seriously, you want to be investing incredibly wisely at the minute when it comes to property, making sure there's plenty of cushion, there's plenty of profit, and there's plenty of uplift if need be.
Also, like we've always said, you buy for cash flow.
Yeah.
So in many ways, let's say you bought something now and it dropped really bad and it took 5 years to recover. In many ways, it doesn't matter as long as you're not planning on selling it.
Yeah. I mean, I agree with that statement 85, 90%, but I do agree with the next question then is, would you recommend buying a house in an area that's that's got no sign of appreciation in the next 20 years if it provided you good cash flow?
Well, how could you possibly know? Capital appreciation.
No, but just by historic data. So going by historic data, for instance,
areas like that don't exist. The areas that no, they don't.
Dude, they do.
You reckon, where?
In the northeast, there's houses that are now worth less today than they were 20 years ago, and even 10 years ago.
I'm not 10 years ago for sure.
Maybe not 20. That's a bit much, but definitely 10 years ago. There's houses up there.
I agree, but
for instance,
listen though. For me, I'm looking at there thinking at some point that's got to go up.
Hey, good morning. I agree with at some point, yeah.
Not look at it and go, because historical data is like, how much are those houses now, northeast? Give me a price example. How much?
I'll give you an example of somebody that sent me a deal the other day asking me to help them fund it. Purchase price is £27,000. Right? Okay, it's not a lot of money. £27,000 purchase price. Right? It was sold to the current person in 2008 for £43,000. And it's been on the market for over 2 years. You can't sell it for 27 grand.
Yeah, I totally believe that. But are you telling me that you think that over the next 10, 20 years, you said 20 years, it will still be £27,000?
No, I'm just saying through historic data, it's not gone up. So
no one's saying that they go up all the time. What I'm saying is you said to me that
no, I'm not saying that. No. I completely get it. No, don't twist this. Right? I'm not saying that. What I'm saying is, you said we buy for cash flow, not for capital appreciation, or don't buy for capital appreciation. If it comes, great. But my question to you was, if you could buy a house that is not going to increase in value, but will give you good cash flow, would you buy it? That was my question. Okay. So what I'm getting at is areas like certain parts of Blackpool, certain parts of Northeast, they've not increased in years, and there's no sign of it coming back. Okay? I agree that over 50 years, the house price will be different, but who's going to wait 50 years for a bit of capital appreciation when you can come down a little bit south and you get capital appreciation in 5 years? That's what my point is.
I think that capital appreciation is out of your hands, and you don't know which areas are going to spike, which areas aren't going to spike. You know, there's certain areas I've seen. Like I saw Walsall, I saw it rocket up. There's parts of like Manchester, Liverpool. I think Blackpool's going to rocket up because it's been so. You know, traditionally, when something's been low for a while, traditionally, like if you're an investor, you think I want to get in there because at some point that's going to go.
At some point, maybe, I
would say northeast. If it's £27,000, listen. How much does it cost to build a house?
I get that. No, I know exactly where you're coming from.
It can't be £27,000 in 10, 20. It can't stay there. It's going to go up.
Whereas I completely understand that.
You could argue London could be in a bit of trouble. 500,000 people move out of London. What's gonna happen to demand there? I think London might. In fact, London's pretty much guaranteed to drop, isn't it?
Well, there's been no rent rises in London. Rents in London are actually going down, and house prices are not. They're nowhere near where they were, or they're definitely very sticky, shall we say? Where they're not going up, but they're not going down massively, but they're not. They're certainly on a slightly downward sort of.
It's not going to drop. It's not going to drop too much, because as soon as it drops, the demand will go back up again.
Yeah, of course it will. Yeah,
it's one of those, but I think you buy for cash flow. Capital appreciation is a bonus. Listen, if you know all the other things like stocks and gold, for example, gold. When you buy gold, you're only buying it for the capital appreciation.
For sure, yeah. It doesn't generate cash flow.
To give you any cash flow, and whereas with property, you get both. And you pretty much guaranteed a capital appreciation wherever you buy over a long period of time. You're going to be pretty much guaranteed. But you're really buying for, I think, is your cash flow. Personally, it depends on what you want.
I agree with that to a degree. I agree with that to a point.
Hey, but listen, if I've got like. I remember when they were doing HS2 in Crewe, you think, okay, you of course you look at areas and you think, I think that's going to rise. And but for me, you buy for the cash flow. The capital appreciation is a bonus. So I bought houses that have given me little cash flow, and then they haven't gone up in 10 years. And everyone was saying, oh, it's going to go up, it's going to go up, and it doesn't. Like I know, like you've got apartments in Warsaw, where I'm from, that were going for 80 grand 10 years ago, and now they're worth 60.
Yeah, there's many places in the country like that.
Yeah?
There's many places in the country like that. So, anyway, it's what it is. Find a good area, find a good house, buy it. So it's doing it.
It depends on what you're buying for, doesn't it? But
yeah, it does, yeah.
Depends on what you're buying for. But I think now is probably a good time to buy, because they are going to go up. I think if you get too hung up on capital appreciation, it will be off buying.
It will, but I completely get it. If you only look, if you've got, I think it's a balance, and I think whatever you're more edged towards, then that's what you buy for. Personally, I'm not that interested in buying in areas like the Northeast and things like that anymore, because I only really want to buy in the Midlands and in this sort of Bedfordshire, Northamptonshire area, which I'm doing. Because I know they're going to get good capital appreciation and they're going to get great cash flow. So that's what I'm doing. So cool.
Right, it's now time for this. Cool. So what questions have we got this week, Al?
Okay, so this is from Connor Maloney. Hey, Alistair and Russell, hope you're both well. We are, thank you, my friend. How much content do you guys post on social media, Facebook, LinkedIn, Twitter and TikTok per day? What should we be aiming for? Thank you guys, you both are killing it. Okay, Connor, listen, I'm quite active on social media, YouTube, LinkedIn. I don't do Twitter and I don't do TikTok because I'm not 12, but I am very active on all of these things. I do a lot of YouTube, I do a lot of business postings, things like that, but I don't tend to do any sort of personal stuff on social media. It's all generally business related, but what I'm doing, what I'm up to. And I try and so YouTube I do twice a week. I try and post something at least every day on on the channels, but it doesn't always happen. So I would be aiming for 2 or 3 times a week. But it depends how active you want to be, because it is actually quite time consuming. So yeah, what about you, Ross?
I think it depends on what you want. So what you're trying to build, what your purpose is. Is it for brand awareness? I think it very much depends on your motive. But if you're trying to build a brand, I mean, I'm not really trying to build a brand particularly. I mean, I know I do this, but obviously our business partners with Samuel, so it's all about his brand, and we're in business together. So I'm more bothered about his social media. So he posts a lot every day across all the different platforms. Me personally, I mean, I do this, but I'm more do it really for me. I'm not trying to I'm not trying
Yeah.
to build anything. So it's a bit different for me. But I don't like
Cool.
pieces.
Good. Okay, Joe Castley. If you use a bridging loan to do a buy refurb, do you have to wait 6 months before the refinance onto a buy-to-let mortgage? No, Joe, you don't. You don't. Typically, you don't. It's only if you use like a buy-to-let. Sometimes there was a ruling, or I don't even know if it was an official ruling. I think it was like a guideline you can do within 6 months. So no, if you use bridging, you can do it as quick as you like. However, do be aware that sometimes bridging loans have an early repayment fee that might not actually save you any money. Okay?
I'm gonna tell them something now about. So it just reminded me with that question because we had not. So
Yeah.
basically, Alistair lost. We filmed a whole podcast, and it was probably the best podcast we've ever filmed. And Alistair lost it. That's why we didn't put one out last week. So I don't know how he lost it. I don't know what happened. He tried to blame the marketing team.
We recorded it on Zoom. I downloaded it and I emailed it via WeTransfer, and it never arrived. So that's not really my fault. But
And then he deleted it from his computer. Why?
Because my computer is full of videos and it just loads up.
That question came up because we're using the same questions because we're really annoyingly having to repeat the show. It's like, honestly, there's nothing worse. There isn't, is there? And that question,
boring as last time. Go on, come on, hurry up.
So, what was our? We really argued about that question for about 5 minutes, didn't we?
We didn't argue about it. Now, my point is, bridging finance. Obviously, most bridging finance in terms and conditions will have early repayment and early settlement fees, or a minimum term that you have to take out. So it might not be financially viable if you've got to pay high interest. High facility, high setup fees.
So he said, "Do you have to wait 6 months?" And my answer was just no. And your answer was, "It depends." I was like, "It doesn't depend. You don't have to." And then
I agree you don't have to, but it does depend. Financially, it might not be the best financially viable option to do it within 6 months. You might be cheaper to wait until the end of 6 months and do it then.
But you don't have to.
Okay. Tom Hicken, as a deal sourcer, does the recession mean even if people like myself find good deals, investors won't be interested? Tom, no. Investors still want to buy. They're super invested in property and they love buying. As Warren Buffett says, when the world is scared, you should be greedy. So just buy. That's what investors are very, very much interested. I'm actually meeting up with an investor. I'm driving up to Scotland or Cumbria today, and I'm going via Bradford to meet an investor of mine who's come over from Switzerland. And he's in the UK, and I'm going to meet up with him hopefully for a bit of lunch, and we're helping him find some more deals in the UK.
Under your reckoning, the Scottish football team might be able to improve because they could just nick all the Northern English players, couldn't they? Like Jordan Henderson.
Right, okay. Lee Lowes, with the UK's largest recession on record announced this morning, obviously this was a few weeks ago, do I now wait for property prices to drop before making a purchase? Lee, we've already discussed that in this week's show, so rewind or take notes from earlier on. Vitaly Gromov. Hi guys, thank you for the hard work answering questions and helping people like myself. No worries, my friend. My question is, I'm looking for a deal package in Birmingham. I'm looking for a house for potential 3-bedroom HMO to convert a second living area into a 4th bedroom, and if possible, if the property is in an article area, do I need a license, or if the only 4th bedroom, do I need to apply for a license? Okay, so the question's a little bit jumbled. So basically what I'm taking it from it is you're going to buy a house in Birmingham, which is currently covered by Article 4. You want to convert into a 3-bedroom house into a shared living. And do you need a license for that? Because it is from 2 separate families, yes, you would need to consult the council because you're changing the usage of the property. So yeah, in answer to that question, you would need to inform the council and change use because you've got members of people from 2 separate families living there, and it's classed as multiple dwelling. Okay, we'll do a couple more and then we'll get wrapped up. Right, Indaman, I have a limited company without any properties in my portfolio, but have money to invest. Can I get a mortgage on my limited company without properties to show? Yes, you can. So speak to a really, really good mortgage broker, whole of market, and they will be able to help you with that. You may have to provide personal guarantees, but they can definitely do that. Last question. Hi, Alistair. This is from Ian Barton. As the market is still in its bubble, should buyers wait out 2020 until prices are truly down or near rock bottom, or should we be buying? Ian, that is not going to happen in my opinion. Prices are not going to hit rock bottom. What are the most likely scenarios cash investors, bank are going to implement now we're in recession? I honestly, none the wiser. I don't know about that. I don't know what the likely scenarios are. And what would you guys be keeping an eye out for this year in regards to market changes? And how would you go about altering your existing investment strategies if certain changes occur? Okay, listen, if you're going to buy anything during this time, make sure there's plenty of cushion and profit to be had. Do not buy anything that's borderline. That you, like don't buy anything that's like, say, 60 grand. You're going to do a 10 grand refurb and it's worth 80 grand because it's just not worth it. I wouldn't do that unless you're looking at cash flow and you don't mind leaving some money in the deal. Personally, the deal I've just bought in Bedford, which if you've not seen it, go onto my YouTube channel, you can follow the process. I bought it for £210,000, £45,000 refurb, it's worth 350, already been valued. There's loads of cushion there, loads of profit margin. That's the only sort of deals I'll be buying at the minute. As regards to what I should be watching out for, I would be biding my time, watching the markets, watching estate agents, speaking to estate agents, but only be like a sniper, okay? You're sitting in the bushes. You might wait for days, weeks, months before that Taliban jumps his head out from behind the tank or whatever, and then you take your shot. Do you know what I mean? Like, seriously, you're not going to be firing loads of rounds off at all people. You're literally going to be waiting for that one kill shot. Like, that's what you want, and that's what you want in the market. That's my opinion. Like it, lump it, that's my opinion.
I'll lump it. And on that bombshell, it's time to end. So, guys, thanks ever so much for tuning in. I'm Russell Leeds.
I'm Alistair Cunningham.
And this was the Property Investors Podcast. We'll see you next Friday. Enjoy your week.
See you guys.